Kwame runs a printing business and he made over $7,000 in the last quarter. Unfortunately, he couldn't pay rent, he couldn't pay his staff, and he had to borrow from his cousin to be able to pay and offset this on and keep the lights on. The question is, what happened? Kwame could see that there was profit, but he had many traps that he couldn't handle, and many business owners fall into the same thing. I want to show you what Kwame didn't see and what you must do to fix it before it comes to you. Now, let's go straight forward. There is a difference between cash flow and profit. Kwame didn't see the two differences. Today, I want to break the two differences for you. Cash flow and profit. If you don't understand them, you can think that you are making money, but your business will still feel broke. And so now let's pick the first one, which is profit. Profit, we are told from our basic mathematics and business thing that it is revenue minus expenditure. In other words, whatever you have sold, you've made sales of, let's say, $10,000 and you have spent about $7,000 on other things. It means that your profit is $3,000. Now, and that is done on paper. That's the first thing, it's done on paper. You also have to know that it is after expenses. That is where you get to know your profit. Then as well, you're talking about, it includes unpaid invoices. Invoices that you issued and people are yet to pay. You can as well add those ones to your profit. And yes, that is part of it. But you get to know that it is not real cash. You can see that everything is doing well. They've made lots of money on paper. But in reality, the question is it real money? Sometimes it is not real money, because real money is what we are talking about, cash flow. When you realize that there is real movement of money in and out of your accounts, your bank accounts, you get money going in and you get money coming out of it to either restock or to pay salaries or to pay rent. If you have all of these going in and out, that is real cash that you are seeing. The next thing about cash flow is that cash flow is what is in the bank. If your books tell you that you have made a profit of, let's say, $10,000 and you don't have $10,000 in your bank, where is the truth? It just means that you are not making the money your paper is saying you are making. You need to know these two differences. The next thing is that timing is key. For many of us, we make sales to customers on paid invoices. Then it takes so long for us to be able to get those monies back. Meanwhile, we have to pay rent. Meanwhile, we have to get production running or operations running. You may have to buy raw materials, or you may have to restock, or you may have to make some repairs. All of these, if you don't have it, remember that prices of things may be fluctuating. And so if the person bought it at, let's say, $50 and takes so long to pay, and you were supposed to make an operational payment of a certain amount and it delays, it means that the time the person is going to pay, you would have somehow lost value of it, the time value of money. Then cash flow also pays the bills. If there is no cash flow and your books say that there's profit, I'm also able to pay bills. So cash flow pays the bills. That is where you get to know. But there are many of these things that I want to tell you about. The common traps that most businesses fall into that makes them see and think that they're making profit, but in reality, they feel broke. Now, the common traps that we're going to look at is that you always have delayed payments. And so when there is a delayed payment, you think you have money, but in reality, you probably delayed to pay salaries, you probably delayed to pay rent, you probably delayed to pay some operational cost, and you think that you have a lot of money. But after you've made that chunk amount of payment, then you would have realized that you are going to have a skeleton bank account. The next one is that you overspend early. We project and see what we want to do. We buy things up front, stocking the shop or getting raw materials without having money with you. When you do that, it means that you are reducing your cash flow And when you reduce your cash flow, you won't have real movement of money, you won't have money in the bank, and you will always be trapped. You can't pay bills and all of that. The next thing is that you mix the accounts. There are many business owners who happen to mix business accounts with their personal accounts. And so they may have some business money going into their personal accounts. They would have ended up spending it even without knowing. Then they later realize that no, my books say I make money, but in reality, I don't have money in my bank. It's probably because you're mixing your funds. But it's possible to be fixed. Everything is possible to be fixed. We can fix this issue of being deceived that you are making money when in reality you are not making money. Or maybe you are making money but are not able to really tell what is happening. We can fix this by making sure we frequently check our accounts. I would advise that you do weekly checks because, well, but that would normally depend on your cash flow, how much sales you are making every week. If you are able to track all of these, any loophole can be trapped even before it becomes a very big one. Then as well, you have to speed up your income. For many of the times that we make sales on credit, and the invoices that are unpaid take so long for the people to pay them. When you do that, you are running at a loss unknowingly. And then you need to separate the bank accounts. Business and personal accounts should never cross. If they do, you would even have problems with taxes because you probably would have ended up paying more on tax when in reality that amount of money wasn't supposed to be for the business. Or you would have ended up not really paying taxes for what it's supposed to pay. I know many people don't want to do that. Then the other point is that you would have been letting the business suffer because the money is going into your account unknowingly.